I'm going to be showing you guys how to use market structure with your channels. So this is going to be extremely powerful once you know how to use these two tools together. Up until this point, you guys have had a lot of weight placed on your channels, and I'm sure you guys have had situations where you've had false breakouts from your channels, you've lost money, or perhaps you felt like price has reversed within your channel and you are ready to take bounces from the channel's support or resistance when in fact price just simply broke through and left you again losing money. So in this video, I'm going to try and tackle this for you guys and show you how you can avoid these situations, predict when these things are going to happen, and therefore increase your wins and losses, increase your profits in the live market. So I'm going to go ahead and get started by marking a simple channel here on UJ on the 4-hour charts. And so we're going to take this channel up here. See, just a beautiful channel here. So ignoring this move, I will make a note here. We're going to ignore this move. Ignoring this move, likely fake, volatile news event used to stop hunt retail traders. You can identify the real channel using the rest of the data. Okay, so I made a note down here, and guys, this will be important when you are drawing your channels. This move down here was not real, and you can kind of tell, just look at how the market is flowing. Like, does this even make sense? No, it doesn't. So, and you guys can see when you take this move out, everything aligns beautifully, right? And so this is the channel that you guys will want to be trading moving forward. So the second you guys saw this shoot back in, you guys should have been looking at this as your channel support. Now, anyways, we have this ascending channel. Let's go ahead and mark structure within our channels. So here we go. Boom, boom. I will ignore that push down there. Boom. Guys, take your time when you are marking your structure. It's extremely important that you have your structure marked correctly. Incorrectly marked structure will lead to losses, unnecessary losses in the market. Okay, so here we are. I have structure marked throughout the channel. Let's say that we are up here in this zone. So I'll go ahead and put a vertical line here so you guys can see we're up here in this zone. And we are trying to figure out what's going to happen here. So we know that our structural low, which is important because we are in an uptrend, and that tells us when the uptrend is over, essentially, and price should reverse and go bearish, is this level here, right? We knew that ahead of time because this is where our structure was sitting. Now, as price came down to the bottom of the channel, we saw the channel break, retest, and it bounced from our structural support twice, retesting twice, okay? Now, I want you guys to understand something extremely important right here in this area. So I'm going to highlight with my lips here the area that I'm talking about. Right in here, guys, this area right here. It is extremely important that I want you guys to understand this. Structure will always trump your channel, okay? I will repeat this. The structure will always trump your channel. Structure over channel. Guys, this is extremely important, and it's tough to learn this when you're backtesting unless you know how to backtest properly, because a lot of times people go through when they're backtesting and they do what I just did, they just draw the channel right on out. Well, they don't realize that they didn't have that channel drawn that way necessarily at all of those steps, right? That channel became that channel after all those bounces were accounted for, but at the beginning they may have had it drawn differently, and I'm going to show you guys an example of that here in just a moment. Now, what ends up happening is price will break through, and then it will continue to bounce up, and then you just draw your channel down here as if that never even broke out in hindsight. But in the live market, it's a breakout. You guys have to understand how to trade these things. So with that being said, you have your structure down here. Guys, price has broken and retested this channel. Any sell entry right now, any sell entry, as long as we remain in this bullish structure, is extremely, extremely risky. Okay, it's extremely risky. Now, with that being said, any buy entry right now, with us having exited our predefined channel, which as you guys can see is pretty well defined. We've had a lot of great bounces from this level, so we have a fairly confirmed channel. Now, any buy entries right here with this channel resistance on top of us, right? It was support, it's now resistance since we've broken through, is risky. So you should not be taking any trades in this area that I've got highlighted here. This is a no trading zone because you have bullish structure sitting just beneath you, telling you that price could easily go up from this area, bounce right back through. You know that structure trumps channels, and it's a risky sell trade because the channel, which was once acting as support, is now acting as resistance since you've broken beneath it. So you're sitting right in between a support and a resistance. You do not trade this area. Now, I know some of you guys are thinking, wait, I thought when a channel breaks and retests, that's your sell entry or buy entry in the case of it being a descending channel. Well, yes, that's true. And you guys can see that in this case, it's going to work out just fine. But in this case, structure is sitting just below you. So a lot of those times when you guys are seeing channels break and retest and you're entering right off the bat and you see that trade lose, this is what's going on. You guys are still sitting on top of structure and it's not a confirmed sell trade yet. So in order to maximize your gains and minimize your losses, take the best trades. You guys want to see the structure change take place before you start changing your overall bias in the market. So you guys can see what happens next. Price breaks through our bullish structural support with a strong bearish candle. We see price sustain here on this next candle. You can sell on this candle, but the perfect entry is right here when price comes up to retest this area perfectly. That is your perfect entry. That will give you the best risk to reward and the highest confluence trade. And you guys can see, if you weren't comfortable selling yet, you had bearish engulfing candles come in, which again told you, get on the sell trade, guys. Get on the sell trade if you see this taking place in the live market. So that right there is an example of how structure and channels come together to give you a trade setup. So what I'm going to do now is I'm going to flip us around and come down, and I'm going to show you guys another example of how this really plays out and how you should be using these things to avoid losses. So I'm going to go ahead and remove everything I've got here, remove everything, and voila. Okay, so we were sitting right in this area. Our previous channel had broken and we are now heading down. So based on what we see right now, our channel is formed based on these two peaks. So I'm going to go ahead and bring this down like so. Okay, guys, this is how you learn to trade the live market using the data in your backtesting history. This is how you do it. You go from the left to the right, understand what you would have had drawn at any given time, and trade that. You don't just draw the channel as you see it clearly. Trade it as if you were in the live market. So we're sitting here, and we know, okay, draw your structure, guys. We know that structure was breached here. Okay, so I'm going to go ahead and identify boom, 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 and boom, and that's where we're currently sitting. So structure now for our downtrend, our major structural resistance that determines our bias in the market rests here, and our likely retracement is in this area here. So, and you guys can see that's exactly where we retrace to. So we're going to move down now through this channel, move down through this channel, and boom, what happens here the very next day? Price breaks out of our channel. Now, I'm going to move structure down because it's resting right here, and our recent swing low, which is our likely retracement point, going to bring that across. Okay, so I'm sure you guys are already seeing what's about to happen. Price is broken out of this channel. You get this candlestick here, which is a sustaining candle based on the rules and your understanding of how channels work. This is a buy candle. But guys, what's wrong? That's right. We're sitting right under bearish continuation zone, right? We're sitting right at our recent swing low, and you guys can see we already got interactions here. It's a very important support and resistance level, and we still are in a bearish market. We have not changed to a bullish market, so you should not be buying anything, guys. Should not be buying anything here. And sure enough, look what happens if you guys took this buy trade here on a break and retest of the descending channel. You guys got burned hard. Okay, this is how you're going to use these two things together to trade the live market. So now what? Now you know that your channel is up here. I'm connecting this peak here, and make sure you keep it formed as we go. So here we go. We're heading down. We are heading down. We retest the recent low. We don't quite break it, and then boom, the second that we break it, guys, our structural level swings down to right here. And our recent swing low, our most likely retracement area, is right here. So I'm going to bring that over. Now, again, watch how this works, guys. Watch how this works. Price retraces, breaks through our channel, and guys, I'm going to zoom in here so you can see this. On a lower time frame, this gave you a perfect retest of the channel. It broke and retested perfectly and continued on. I can tell just here because I can see this wick down here, which tells me the price went up, came down, and then went back up to close up here. And it's a bullish exhaustion candle. Everything says to buy, but we are not going to buy this because our structure is bearish, guys. This is a bearish continuation zone. This is a simple retracement zone. You cannot buy this pair until what, guys? Until price breaks, holds, sustains, retests, however you want to word that, and then continues. Okay, that's the only time that you will be buying this pair. So price is coming up. Okay, price is coming up, and then boom, where does it stop, guys? Where does it stop? Where does it start to struggle? You can see these bearish exhaustion candles. What's going on? It's bouncing off of our structural resistance, guys. And then you get a big green engulfing candle which comes through. The aggressive buyers are already buying, right? And everything looks as if it's going to continue. All you need to do is see price sustain out here and you're good to go, right? What happens next? A giant bearish engulfing candle comes through, takes us right back into bearish territory, and we will continue going down, right? This is why, guys, it's so important that you make sure that not only does price break out of the bearish market, but it sustains, because you guys will see this all the time. This is a fake out. This is not real, guys. This is an unnecessary loss, so don't take it. Simply wait for price to sustain and then hop on. You guys will eliminate so many losses. Here we are now. We're continuing on. Again, we adjust our channel now, and we're going to adjust it to the downside too. And then look how we go moving forward. I'm just going to extend this down. Extend this down. Guys, look. We broke out again. We broke out again. Let's see what's going on. We come down, we come up, still haven't made a new low. Boom, this is not a significant move for me. I'm going to skip down to here, and this is our new low. So we move our structural level down to here, and then we move our likely retracement level down to here, right? Recent swing low, recent swing high in a downtrend. So pulling this across. Guys, why are you not buying this break and retest of this descending channel? You are in a bearish market and you are right at the most likely reversal point. If anything, this is a sell. But again, what did we talk about? What did we talk about earlier? This is neither a buy nor a sell. You will do neither of these trades. You will not take any trades in this area here. You're right in between a resistance and a support, and you guys can see it plays between these two until it finally breaks back inside with a strong candlestick, retest back from the inside, and continues on. Guys, this is how you really trade your channels in the live market. If you guys are back testing these channels and you're just going through and saying, oh, la-di-da, here's a fantastic channel, and you just draw it like this right off the get-go, and you don't realize how many changes were made during the formation of this channel as it went along, you guys are going to be extremely surprised in the live market when you start to take losses. So I really encourage you guys to go through your history and really approach this from a live market standpoint, because that's what's going to make you a profitable trader. Guys, use the market structure along with your channel, and you will always know what the bias in the market is, whether you are looking for buy trades, whether you're looking for sell trades. And I promise you guys, that is most of the battle for trading, is simply knowing whether you should be buying or selling, and that's it. So if you guys can get this down, you will be a profitable trader. There's no question to it, guys. So please do your due diligence, go and practice this, see how this works, see how you can use these two in combination. Look at the examples of when they break together at the same time or when they don't break. Sometimes, guys, sometimes structure will break within the channel before the channel has even broken, right? So we are seeing examples here of where the channel broke but structure hadn't. Guys, structure will break if you, especially if you have like a larger channel. So this channel is like way like this and price has been really swinging around. Guys, structure will break within this channel and you'll be bullish structurally before the channel even breaks. So you need to know when that's going on too, and know that there's risk involved until the channel has broken, until both of these things align. So I hope you guys got a lot of value from this video.